Oh man, so Bitcoin is showing some good strength, breaking out from a resistance level. We're going to show you in the charts how Bitcoin has managed to digest the news over the weekend regarding all the FUD we had from Thursday onwards, from the CPI reading to what interest rate hikes are we going to see on March the 16th. Then we had, is there that Fed emergency meeting, which wasn't an emergency meeting? And then in the final hours of Friday, we got the news about Ukraine and Russia tensions, extra FUD there. That led us into the weekend. And now Bitcoin is showing some great resolve when the rest of the market is super nervy. Make sure you stay tuned till the very end. We're going to take a look at the charts. I'm going to give you the important levels on the chart that we need to watch out for here on Bitcoin. And we're going to take a look at some of the macroeconomic elements to see what is going on this week. Make sure you check out NordVPN, links in the description. If you have not yet gotten yourself set up on a VPN, guys, if you're trading crypto, if you're playing around in crypto, metaverse, NFTs, you're dialing into it, logging into exchanges, and you don't have yourself set up on a VPN, guys, please make sure you're set up on a VPN. You'll be shocked at how much of your data is publicly available. Just head over to NordVPN, click the link below, and you'll see how much of your data is just publicly available. You can have a read on their website, but 70% off of 2-year plans. I think it's like 2 years coverage for like $50-$60. So you can't go wrong, guys, if you have some serious money in crypto. Anyway, let's get straight into the Bitcoin chart, because here on the Bitcoin chart, you can see we had this long-term resistance as characterized by this violet line to the downside. This goes all the way back here to the 11th of February. Okay, so when we got rejected from this point on the 11th of February, we ended up in this slight downward channel. And to be honest, ever since the CPI data came out and we got rejected from this point at 45,000, we've been sent to the downside. We collected some support here from 41,659 level, and we bounced strongly. We've broken out from the resistance now. We've had 3-4 candles now above the resistance line. We've closed above the previous pivot, which is fantastic. Now the next key line for us here from a technical perspective is 43,019. Okay, that's this peak here. We've got to get above this level, perhaps get a retest. Okay, so just need to break through this level, get a retest, and then the next level at 43,479. Now the 43,479 level is a resistance from previous times. Okay, so this is a long-term support and resistance level, so I expect to see a little bit of a fight there, but the next pivot point is then at this level here. Okay, so that's your level at 43,981. Call it 44,000, which is the top of the wedge, which is when we entered this downward resistance. Okay, so immediate term, let's get above this pivot here. Fantastic. Let's get above this support line, and then let's work our way towards the top of the wedge. But this is some really good strength. If we zoom out here, you can see that, remember that weekend when we were consolidating a long time here at this 41,643 level? It's exactly where we managed to pick up some support from here, consolidating here in this triangle and breaking to the upside, which is great. Now we need to mount our attack all the way back up to the levels where we got rejected before, which is at about 45,500. Now, what is surprising is that Bitcoin is managing to show this great resolve. Let's head over to the daily. In an environment where, in a macroeconomic environment where the market is really spooked. So you remember traditionally we have this debate of whether Bitcoin is treated as a growth stock, is it treated as a risk-on asset, or is it treated as a hedge against inflation? Now, if you haven't watched my video breaking that down, make sure you go check that video out, because the answer is a bit more nuanced than people want to give it credit for. There is an element of both. For certain type of traders who trade on a certain time basis, Bitcoin is considered just a risk-on asset. Just like they would treat a Tesla or a high growth stock, they trade in and out of their Bitcoin positions the same. Okay, and there's YouTube influencers who you and I know that do the same as well, who are heavy into stocks and other assets, and they treat Bitcoin the same. They'll throw 100k in and they'll take it out. Then they'll throw 100k in and they'll take some out, and they just treat it like a risk-on asset. When things are going good, they want to ride the wave. You then have the other type of investors who do treat it as a hedge against inflation, but also as this long-term schmuck insurance, right? Like if the world went to pot, Bitcoin is my insurance. If I keep 5% of my portfolio in Bitcoin, and Chamath Palihapitiya spoke about this, right? The successful billionaire. He spoke about this and said the same thing. It's an insurance policy, and he's right to all intents and purposes. That's the right way to think about Bitcoin, is if the 95% of all your other investments in fiat that you have locked in stocks or real estate or in your job or business or anything else was to go to pot, then this 5% hedge that you left in this new world establishment in terms of Bitcoin and cryptos, that would then keep you afloat, right? That's the way to think about it. And that we're seeing a lot of people rotate into this right now, given the uncertainty in the market, whether that's due to CPI, whether that's due to the oncoming lift off in interest rates and the successive interest rate hikes we're going to see. We are seeing that start to play out. And now we can see from the bottom here on Bitcoin, we've had an impressive, let's just take our measurement tool. We've had an impressive. Let's just get it there. There we go. To where we're at now, that's a good 30% move, and to the points where we got rejected is more of a 35% move. So this is an impressive lift up from the bottom, considering this is what we're seeing on some of the major indices. If you look at the S&P, again, this is a daily chart, guys, and this is the one I've been monitoring for a while. You can see here I've circled all the areas that I like to dip buy in, right? So these were the retracements. Anytime it came down to the 200 moving average here, I like to pick up. And you can see here, we got a solid bounce here from the 200 moving average. But now we've just got sent back down. So this is a really big blip on this radar that is the S&P over the last 2 years. If we look at the QQQ, which is the NASDAQ, you can see the same thing here on the NASDAQ. We're below our 200 moving average. And the last time that was the case was all the way back in March 2020 from the pandemic. So, this is a serious situation. Something is going on and the market doesn't like it. But for that to be happening in the markets, and yet Bitcoin is showing this type of a pattern up and, bouncing off of lows and showing some good movement and breaking out from another hourly resistance level here, this is good sign of strength, okay? And definitely shows that there are people looking for yield, rotating across into cryptocurrencies, looking for somewhere to store their money. And definitely we're seeing a pickup in DeFi, we're seeing a pickup in stablecoin purchases as people are starting to yield farm to get a return, because inflation's at 7.5%, the highest it's been in 40 years. You're not getting anything in a bank account, stocks are struggling, real estate is not doing the most right now, and so people are looking towards yield farming and getting that APY. Right, what are we seeing as the fear and greed index? Well, the fear and greed index has given us a score of 46. So over the weekend we had 44. 46 now. I think the market's kind of digesting and saying we'll be all right, right? We're seeing some of these the political tensions around Russia and Ukraine. Hopefully a lot of that is just political gesturing and rhetoric, and hopefully we can avoid any conflict and move to the upside. Also on the market's mind was Fed Bullard. Fed Bullard, again, I don't know why this guy gets so much airtime. In fact, I do know why. I'm going to come on to that. He came on to CNBC again. I think it was on Squawk Box a couple of hours ago, and he said, look, I want to, you can read the interview, but in short, he says the credibility of the Fed is on the line, and he wants to front load the rate hikes. In other words, he wants to see 1% by July. And guys, if you've not watched me covering Bullard before, even when the FUD came out at the end of last week, Bullard is probably the most hawkish Fed member. There's 12 members on the FOMC for those who aren't sure how it works, and Bullard is one voting member, and he has always been a hawk, right? He even going back into September last year, he was calling for faster tapering and increase of interest rates. So he's got to keep up that narrative, right? He can't have that cognitive dissonance where he suddenly changes his mind and says, oh, that's not me now, I'm a dove. No, he needs to hold his rate. So it's good that he has that view, and it's important that he can give that view to Jerome Powell, as well as there's other Fed members who don't get the same airtime, such as Marie Daly, who's wants to be less aggressive and more dovish in her interest rate hikes. Either way, this is just, it's irrelevant, because if you come over to here, as I mentioned to you guys, check out the Fed rate monitor tool. Very useful tool. I always check this out. And you can see here that we've 62.8% have priced in a rate hike of 0.75% for the March meeting, guys. So it doesn't matter. Even if they did a double rate hike of 0.5, 2/3 of the market has already priced in 3 rate hikes, 0.25, 3 times 0.25, which is 0.75, and the remainder 37% are expecting it to come in between 0.25 and 0.5%. Okay, so there's not much that they can do to shock the market. And in fact, if we go all the way down to December, by the end of the year, and look at what's being priced in, the majority of the bulk of it, you can see, is in between 1.25 percent all the way up to 2%. That's what the market is expecting. And remember, getting 1% by July isn't too out of the out of the realms. Like, people, that'll be okay, because if they did 0.5% in March and another 0.5%, I think, in the June meeting, then you're all right. That gets you to your 1%. I don't think the market will be too concerned about that. If you look at the July probabilities here, you can see that they're anyway 42% have priced in 1% to 1.25%, and 50% have priced in 1.25 to 1.5%. Okay, so it's just FUD, it's just headlines, it's just he gets airtime. And I think part of this is actually a bit of a ploy by Jerome Powell, right? Like, what better way to gauge the sentiment of the audience than to send out your hawkish Fed member onto CNBC at prime time and ask him to mention about 1%, just to gauge the market sentiment. If the market reacts really badly to it, and the S&P and the NASDAQ hike after that type of rhetoric, then maybe Jerome Powell goes, okay, I best not go so fast, then maybe I'll do 0.25 and then 0.5. So by summer time, June, July time, we're at 0.75, right? So maybe he could be using it to feel out the market. Overall, guys, what have we got to worry about? This tweet was quite an interesting tweet that I came across. Shout out to whoever this chap is. Companies hiring for crypto jobs: NFL, Nike, Hulu, Visa, Meta, Apple, Nvidia, Disney, PayPal, Google, Fidelity, Amazon, Microsoft, JP Morgan, MasterCard, State Street, Goldman Sachs, and Bank of America, guys. These are some of the biggest and baddest companies in the world, all understanding that this is the battleground of the future, and they're putting their money where their mouth is. They're investing in this space. And so when we look at the chart and go, hang on a second, where is this going to be in 10 years' time? And you really just go to the weekly chart and you zoom out like this. I sometimes do this exercise, and you put it on a big monitor in your office and you go, where is this going to go? Do I really think it's coming down here? Or do I really think it's going to work its way up? And it may work its way up by ups and downs and lefts and rights, but eventually it's going to go in this direction because adoption has just started, right? Just think about it. The amount of adoption and companies with Bitcoin on their balance sheet and hiring for crypto jobs and thinking about metaverse and NFTs and all the rest of the amazing things which we're talking about and covering on this channel. It's only gone up and up and up. So yes, we can be in for periods of volatility, like I expect between now and these dotted lines, which by the way is the CPI reading in March, and then on March the 10th we get the February CPI reading, and March the 16th we'll get the announcement of the first set of interest rate hikes, which we're fully expecting. So we fully expect some volatility in there, but the strength shown by Bitcoin right now is truly impressive. So nothing to worry about in the longer term. What am I doing? I'm continuing to hold. Like I'm not chasing any green candles. If I see nice pullbacks, I'm topping up on pullbacks, but not right now. We're seeing some good strength here. We're 30% off our lows. I accumulated as much as I could in these periods based on my cash flow. So I'm happy to let this run, right? If we bounce, good. If we head up to 44 and onwards, that'd be fantastic. If we get a little bit of a pullback down to some of the lower levels, then maybe I'll look to accumulate some more. Ultimately, if you're looking at this weekly chart, you're not bothered until you create a lower low. Remember, we avoided this lower low. This was 29, this was 32. So even if we came to retrace all the way down to 36 or whatever, it doesn't matter. As long as we keep higher lows and higher highs, we'll eventually trend out of this retracement. Hope you guys enjoyed this video. As always, if you appreciate this type of content and this blend between technical and fundamental analysis sprinkled with a bit of macroeconomics, then make sure you're smashing up that like button and subscribing. As I said, I'm committed to bringing you guys the research that I'm doing for my own investments. When I set out to create this YouTube channel and post these crypto videos, it was just around the fact that there was so many very popular big YouTube channels spreading misinformation, but not only spreading misinformation actually, but just not spreading enough information around some of the things they were showing you guys in terms of, showing you pumps and showing you, jump into this trade and take a leverage position without even understanding some of the macroeconomic elements, without understanding any of the dynamics in terms of what affects the crypto prices from a fundamental perspective. And that is why I thought I'd make these videos, to give you that holistic view and give you that blend. Because there's nothing better when the fundamentals and the technicals tie together and gives you confidence and confluence in your vision for the future. Hope you guys enjoyed this video. As always, smash up the likes, subscribe. Don't forget to check out NordVPN, link in the description. Also, pin comment is the free Discord link to our public Discord server. Okay, head into there, meet like-minded people, tag me in any questions. We're building a great community there of people who are committed to learning about crypto. So make sure you jump into there, be active, don't be shy, ask me questions, share your favorite chart patterns, ask the other community members what they think of your favorite tokens and the rest of it. And I will see you in the next one.